I look at the performance of stocks like GM and Ford. They soared on those electric vehicle announcements. Think about that. That's ridiculous. It's only 2% of their sales. And what if the other 98% or so forth are on their way out as the consumer preference shifts toward electric? They have problems. They're probably going to be facing some credit issues since they're hugely leveraged to the credit that people take out on their autos. And as prices go down, residual values go down. Where are the crazy valuations now? Are they in our stocks, or is it in an auto stock where there might be losses? And what's that PE ratio? That's infinity. That's where the bubble is.
In this video, Cathie Wood of ARK Invest warns of a bubble in the stock market and an impending collapse that no one is talking about. It stuns me that something so obvious to Cathie and just a few others is being completely missed by stock analysts, retail investors, and stock market commentators. Well, actually, probably not about the latter. Cathie Wood makes the case for why legacy automotive manufacturers are completely and utterly and they don't even see it coming. The amount of financial chaos and destruction about to take place in the stock market is unfathomable. An extinction level impact has just taken place and the dinosaurs are about to go extinct. The bubble is real. If you have friends or family who own stocks in legacy automotive manufacturers like Ford, General Motors, Toyota, or Honda, you should warn them. This video will age very well. Cathie Wood outlines why over $1 trillion of market cap in the stock market is going to evaporate almost instantly. The good news is that on the other side of this destruction is opportunity. Tesla stock. Sorry, I had something in my throat. That's what your mum said. Your job as a smart stock investor is to understand the future and act accordingly. And Cathie Wood is about to deliver a masterclass on exactly that. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
On the new car front, at an annual rate here in the United States, new auto sales peaked in April at 18.25 million units. Now, when we got to October and the auto OEMs were talking on earnings reports, each one of them, including Elon Musk, was saying, okay, the chip shortage is beginning to alleviate. Now, they had been blaming the decline in sales because it started in April and it was declined to 13 million units from 18 and a quarter. That 13 is an October number. Chips were the missing link. Okay, they're starting to be replenished. November, 12.86. December, we just got this number, 12.44. Meanwhile, you've got electric vehicle sales up nearly 100% at an annual rate. What's going on here?
So I've taken the liberty of actually putting these numbers into a spreadsheet to graph them visually, including a trend line. I think most people will understand this a lot better looking at the data rather than hearing the numbers. We can see here a trend line very clearly headed in one direction. And this is an extremely sharp decline in sales. We're not talking about an incremental decrease here or there. We are talking about a massive, massive decline. The annualized rate of US auto sales in April, over 18 million. In December, under 12.5. Now, the whole reason that I've included a trend line here is so that we can extrapolate visually into the future. If this trend continues, we're going to see a further contraction in US automotive sales. We may very well be at a tipping point, ladies and gentlemen.
Well, it could be a combination of consumer sentiment not being happy about what's going on, and a consumer preference shift towards electric vehicles. That is why at the CES show, the Consumer Electronics Show, you heard these auto OEMs talking more about electric vehicles. Of course, it was the electronics show. And we saw that Ford's F-150 Lightning, they were going to have to double production given all of the demand.
As I've been saying over the last few years, this will be a recurring theme. Legacy automotive manufacturer announces a new electric vehicle, whether it's an existing brand or a new product. Consumer demand is far more than they expected, even though the specs aren't great and the price isn't great because there's just so much demand. Legacy automotive manufacturer then says, oh, we've got more demand than we thought, we're going to increase our production goals. Keyword there, goal, not actual production. Then a few months later, a new product or a new announcement. Hey guys, there's more demand than we thought again, and so we're increasing our production and accelerating our EV plans even more. And again and again and again. The theme here, the point, the lesson, legacy automotive manufacturers massively underestimated not only how much demand there is, but how quickly this transition happens, and as a result are on the back foot. And I just want to point out now that this isn't the last time we're going to hear that they're accelerating their plans or increasing their production targets for EVs, because they're going to be doing it over and over and over, because none of them have any idea how fast this transition is happening, aka they're all fucked, it's too late, they're too slow, and they still don't get it. But that's okay, don't worry, relax, because there was one company that foresaw this demand and how quickly the transition would happen. That would be Tesla, who's going to be eating their lunch, breakfast, dinner, and girlfriend.
Well, what they don't tell you during those appearances at CES and so forth is that electric vehicles make up maybe 2 to 3% of their sales, and that 97% of their revenue bases are gas-powered vehicles. And it's probably 90% plus of their production now. If there is the combination of the consumer turning off, not wanting to spend as much money, certainly not on big ticket items, and a preference shift, if they're going to spend, they're going to spend on electric, then these OEMs have an issue. They have a problem.
AKA, they're completely and utterly fill in the blank.
And we think we're going to hear more about it in the quarterly reports. And we hope analysts start asking about it. I look at the performance of stocks like GM and Ford. They soared on those electric vehicle announcements. Think about that. That's ridiculous. It's only 2% of their sales. And what if the other 98% or so forth are on their way out as the consumer preference shifts toward electric? They have problems.
Ridiculous is an understatement. If you ever wanted more evidence that the bell curve is real, I present to you the price of Ford stock over the last 1 year, up 162%. Why? Because talking about electric vehicles and morons in the stock market. 162% on the back of literally nothing. As Cathie pointed out, EV sales as a percent of total sales from these companies in the single digit percents. They're irrelevant, they're a speck. And sure, these EV sales will increase over time, but on the other side of that same coin, you have the internal combustion engine vehicle. Not only will sales collapse, but so too will the margins on these vehicles as economies of scale start to work in reverse. The less ICE vehicles they're producing, the more expensive they become to produce, the cheaper they have to sell them, and or the lower the margins. Eventually, these sales completely disappear from their business. It's not going to be pretty. And if you thought Ford stock was the only example of morons in the stock market, aka the bell curve being real, General Motors stock up almost 40% over the last year. Why? Because they're leading the way in electric vehicles, according to the corrupt president of the United States. P.S. Let's go Brandon. Even Toyota up 50% over the past 12 months, despite the fact that it's obvious that they'll be bankrupt before the decade is done. They have no idea what they're doing.
They have problems because their gross margins, depending on the company, are somewhere between 10 and 20%. Those are very low gross margins. And if you look at the Bloomberg estimates for this year, 2022, after a very weak 2021, you see growth estimates in the 10, 15, 20% range. The US-based ones are at the higher end of that.
Just in case anyone watching doesn't understand, the Bloomberg estimates are the consensus opinions, the average estimates from all of the Wall Street stock analysts covering a particular stock. Is it any wonder I continue to shit on the Wall Street analysts because they have no idea what the fuck they're doing? On average, yes, there's exceptions to the rule, but it stuns me that these 160 IQ geniuses getting $500,000+ a year to pick stocks and recommend buy this, sell this, hold this, etc. have no idea what's around the corner, don't see it coming, and are completely blind. Unfortunately, they don't seem to get paid on performance because some of these folks have been wrong about everything forever and still have a job. Shame.
Well, that may not happen. And again, they don't have a lot of room for error. And we have seen them pivoting and announcing that they're pivoting ever more quickly towards electric. But the problem is almost 100% of their base is going to go obsolete over time. Very, very interesting there. One more thing, going back to autos and giving you a sense of where the bubble might be in this market. It is not in innovation stocks. They've been cut in half, many of them, some by 75%. Listen to this. I gave you the story about Ford reporting that it would have to double its electric vehicle production of the F-150 Lightning, and the stock just taking off, not paying any attention to the auto statistics I just mentioned. Well, when I think of what could happen in that space, and I see these stocks ramping on sales that mean nothing to these companies in terms of their earnings, shall we say, right now. In fact, they need to invest a lot more in electric to make it happen and to move the needle in these companies. But what if we're right and there is not a 20% increase in sales? Maybe sales are flattish year to year. That would put them at roughly 15 million units, and they'd probably have to start cutting prices if we're right on the used car market and the pricing there, which means they're probably going to be facing some credit issues since they're hugely leveraged to the credit that people take out on their autos.
This right here is the most important point in the entire video. Cathie Wood is exposing the huge, colossal iceberg beneath the surface that people don't seem to be understanding. If you're not a lazy motherfucker, I highly recommend going and looking at some of the financial reports from legacy automotive manufacturers and look at how much of their business is comprised of financing vehicles, financing internal combustion engine vehicles, the dinosaurs that soon will be extinct.
And as prices go down, residual values go down. And, auto credit was the best performing credit in 08-09. And so there's a lot of complacency in that market. In 08-09, what do I pay to just keep things going? Well, they were going to pay their auto loan down and default on their mortgage because it would take a while for them to get kicked out of their house, but they needed to get to their jobs. Today, that would change because of ride hailing. So we think that complacency is misplaced and that the auto credits out there could become a mess.
Could become a mess may in fact be the single greatest understatement in the history of Cathie Wood's career, and I know that's a big call. In my opinion, we will unquestionably see a cataclysmic implosion within legacy automotive manufacturers as a direct result of having financed so many of these dinosaurs. This is independent of the tens of billions of dollars they need to invest in transitioning their production to electric vehicles. This is irrespective of the fact that the margins are going to absolutely collapse on their ICE vehicles as they produce less, and in addition to that, there's going to be less demand for ICE vehicles, therefore they'll need to be cheaper anyway, meaning the margins collapse and they start losing money on ICE vehicles before they're making money on EVs. This is a whole other nightmare.
So if I'm right on any of this,
that's financial legalese for we are right, but I can't say we are right because if I say we're right, then I'll probably get in trouble due to compliance because we run investment funds. I'm here to tell you, Cathie Wood will be right. Here's what happens over the coming quarters and years. Legacy automotive manufacturers see massive declines in total vehicle sales, predominantly due to ICE vehicles collapsing. In addition, their margins collapse, their profits start to collapse, then turn negative. They begin losing more and more money quarter after quarter. This accelerates. Eventually, the dullards in the credit rating agencies start to realize what's going on, and there's a massive hit to the credit rating of these legacy automotive companies because the default risk increases massively. Then it becomes harder to raise capital, go to the markets and get money from investors to try to survive the transition to EVs because it looks like they're going under. Spoiler alert, they are. And all the while, as this happens, the stocks get completely pummeled as investors who lack brain cells, let's just be honest, didn't do any homework and thought, oh, they're making EVs, so obviously they're going to do what Tesla did, I'm going to buy the stock. Realize, oh, they might be going bankrupt. Wait, oh, they are going bankrupt, I better sell my stock. And now that I'm done translating Cathie's ultra-compliant comments, let's hear what else she has to say.
There will be disappointments in terms of the auto sector, and I wouldn't be surprised if at least one of the companies loses money next year, which would be most unexpected. And if it loses money, what is that valuation? Where are the crazy valuations now? Are they in our stocks? Now that Zoom is down to 33 or 35 times this year's earnings?
By the way, just quickly on Zoom, I don't own the stock. I'm all in on Tesla stock. Most of you watching will know that. But I've got to say, it's practically in deep value territory at this point in time. I'm not going to lie.
Or is it in an auto stock where there might be losses? And what's that PE ratio? That's infinity. That's where the bubble is.
Did Cathie Wood just say that there's a gigantic bubble in the stock market within legacy automotive companies? She sure did. Is she right? She sure is.
And I think you're going to see a lot more cases in point as this year moves along, and the innovation that we see evolving so rapidly, DNA sequencing, transforming healthcare, robotics solving the labor shortage problem we're having, energy storage, the consumer preference towards electric, artificial intelligence, which is the glue that is helping all of these technologies converge. And the last one, blockchain technology. We think that we're in a period of innovation that was the dream in the late 90s. But those companies were vaporware. They were based on nothing but eyeballs. We have real revenues. We have incredible growth rates. And if we're right, and the economy has an inventory problem, then our growth rates are going to look far superior to anything you'd find in the value space. And we are really looking forward to that.
Glad Cathie Wood was able to end there on a positive note. As I said earlier in this video, on the flip side of this chaos and destruction, the implosion within the internal combustion industry and the enormous amount of disruption is huge opportunity for smart investors. In summary, legacy automotive manufacturers are universally fucked. They're screwed because of the financing of internal combustion engine vehicles. They're screwed because of the tens of billions of dollars they need to invest in new equipment, new technology, etc. to actually manufacture electric vehicles. They're screwed because they don't know how to put EVs together at this point in time. They're totally different technology to internal combustion engine vehicles, despite appearances. They're screwed because they were way too slow to realize how quickly EV adoption would take place, and now they're on the back foot and scrambling constantly. The valuation of these companies, the prices of their stocks are absolutely insane because the bell curve is real, but eventually this will correct itself. And if you happen to know anybody that owns Ford, General Motors, Honda, Toyota stock, etc., maybe give them a gentle tap on the shoulder and say, hey, have you heard the whole thing about the finance and the transition and the EVs and the profits collapsing and the whole, they're probably going bankrupt thing? That would probably be a nice thing to do. And just finally, don't forget, if you'd like access to my exclusive content on Patreon, there's over 100 exclusive Q&A videos, my Tesla price targets all the way out to 2031, which are updated constantly based on new information, plus a ton of other exclusive perks. Check out Patreon with the card in the corner or the link in the pinned comment, and I'll see you guys and girls in the next video. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.